Low oil prices are making their mark felt. Saudi Arabia's stock market fell sharply by 3% in early trade, the day after the world's top oil exporter reported a budget deficit of nearly $100 billion. It was the first budget under new King Salman, and it wasn't good news. Oil prices, which are hovering around 7-year lows, impacted revenue for the kingdom. It's around $162 billion. Spending was also much higher than expected at $260 billion. The Council of Economic and Development Affairs predicted that next year's budget deficit would run around $86 billion. The government announced it would cut a number of subsidies from fuel to water, meaning prices for Saudis will rise. In this year's budget, oil revenues made up 77% of its total revenue, but that figure was down substantially by nearly a quarter from the previous year. But it's not just Saudi Arabia that is feeling the pinch from low crude prices. Russia is struggling with its biggest budget deficit in 5 years and the worst recession since 2009. And Venezuelan oil prices have fallen to historic lows too. A barrel of Venezuela extra heavy crude was just $29, down from an average of $45 in 2014 and $88 in 2013. Oil revenue is down by 68% this year alone, and the country is struggling with high inflation. The IMF predicts the economy will shrink by 10% this year and another 6% in 2016. Phil Hahn, CNBC, London.